Hey everybody. So I'm going to explain Elliot Wave Theory, which is a really good explanation of how to predict where the top of a cycle is and where you kind of are in a cycle. Now, it is a theory that's been around for a really long time, and I'm going to break it down. This I'm using Ethereum right now on a weekly time frame on TradingView, but I'm going to do it in this little dark area first so you can kind of understand how it works. Now you can click here and you can go to Elliott Impulse Wave. You have 5 cycles, right? So you would start. I'm going to overlay this on a chart and explain it here in just a second, but there's a few rules that you need to know about Elliott Wave. So we're going to start with the zero wave. This is the bottom of the market cycle. Okay, then you have your first impulse wave. Okay, and then you now have a correction. The correction can come all the way back down to zero, or it can stop anywhere throughout this area of price. Okay, let's just go all the way back down to the bottom. Now you have wave 3, which is the largest and the most impulsive wave. This is where everybody gets super hyped up about crypto and or stock or whatever it is, and it explodes to the upside. It's typically the most vertical wave of them all. Okay, then you have another correction cycle, which this correction cannot pass through the top of wave 1. If it passes through the top of wave 1, your count is wrong. Okay, but it can stop all the way up here. A lot of the times you see it come back down to test 1. Doesn't always happen. And then the final wave here can just barely peek through wave 3, or it can shoot way up here. But most of the time, wave 3 is going to be your biggest wave. Okay, Elliott Wave rules is that wave 3 cannot be the smallest wave. That's really important to know. But when it comes to crypto, wave 3 is typically the biggest wave, at least what I've seen. After you go from the top of the cycle or the bottom of the cycle to the top of the cycle, you have something called an ABC correction, which is the bear market. Okay, normally you have one wave to the downside, and then you have a little consistent complacency bounce here. It can come all the way up here. A lot of the times it just bounces a little bit, and then you have a bigger spike to the downside. Now the C can come all the way back down to the bottom of this level, or it can basically stop anywhere within this Elliott wave cycle. And then once that cycle is complete, you start a whole new cycle, and this repeats over and over and over throughout asset classes. Now, one thing about Elliott Wave, you could have there's a whole bunch to it, right? But roughly, this is what you want to understand, and this will help tremendously in stocks and crypto and in general. You could have 50 Elliotticians, people that study this stuff all the time, and all of them would have they would have different counts, but roughly the majority of them would agree on a similar cycle. Now, within each one of these waves, you have subwaves. Okay, so your subwave would be a 1, 2, a 3, which is the most impulsive, a 4, and a 5 to complete the first wave. Then you have your ABC correction. Boom, boom, boom. Then you have 5-wave impulse to the upside, and then an ABC correction, and then your final one here. 1, 2, 3, 4, and 5. Okay, so that's roughly what the whole entire Elliott Wave theory is all about. Now we're going to put this in practice. Okay, so we're going to look at Ethereum, and this is whenever at least the chart shows up here on Ethereum. I thought it came out a little bit before that, but maybe, let me actually see real quick. well, it came out in July, so pretty close to this. There might be a little bit more price action here, but let's go over it for example. Okay, so let's imagine there's just a little bit of a peak here maybe, but you have your first wave here. Okay, then you have your pullback for wave 2. Then you have your most impulsive wave, wave 3, which can't be the smallest wave. You have a pullback, and then you have wave 5. Okay, now you would see this on a chart, and you'd see this 5th wave, and you'd be like, oh crap, we're getting close to the top. Okay, now you can even look at subwaves. Okay, so you have a 1, a 2, 3 is the most impulsive. You have a 4, and then a 5. Now you have an ABC correction. A, B, C. Okay, now let's look at wave 3. You have a 1, 2, 3, 4, 5. Then you have an ABC correction. A, B, C. Okay, then you have your final 5th wave. 1, 2, 3, 4, and 5. And then the cycle is over, right? There's a couple different ways that you could count this, but this is pretty clear and this looks great for me, right? But roughly you can just look, you can even remove all of these subwaves. And you can just look at the single count here and say, okay, well, this looks like we're in our final 5th wave here. Okay, you can also use some of the other videos that I do that predict the tops and bottoms of Bitcoin on times. You can pair this with that, and that's extremely helpful. That's a lot of what I do in the Patreon. It's a monthly subscription. You can check it out. I also do 2 videos a week, and I explain pretty much anything that you need to know about crypto, any questions that you have. I teach you how to keep crypto safe as well. And I teach indicators and pretty much anything you need to know about technical analysis and investing. Okay, it's in my bio it's in my bio, so check it out. Try it for a month. If you don't like it, you can leave, but there's a whole bunch of value in there. I've always been taught to exchange money for value to become successful, and that is a really cheap way to earn a reward on your money. All right, let's get back to it. So now you have an ABC correction. You have that first wave, and then you have A, B, and then C. You have about a 40-50% move here, and then the bottom of the cycle. Now, what do we do here? So we start from 0, right? We have a new impulse wave. So 1, 2 did not pass through wave 1, and then you have wave 3, and then wave 4, and then wave 5. Okay, and you could do the subwaves in there if you want. You have a 1, 2, 3, 4, 5, and then your ABC correction. A, B, C, and then so on and so forth. Well, let's actually, we'll go ahead and do it. So then you have your wave 3, which is the most impulsive wave. 1, 2, 3, 4, 5. And then you have your ABC correction. A, B, C. And then now you have your final. Actually, I'd move this C over to this point over here. So 1, 2, 3, 4, and 5. All right, now we're getting back to the last cycle that we just experienced. You have an A, B, a C. C is typically the biggest wave to the downside here. And now what do you have? So during times, a lot of the times you have cycles that play out like this, but sometimes when you have too big of a move, you will have a larger ABC correction or an ABCDE correction, and it kind of gets in the weeds whenever it comes to this. But sometimes when you have a huge move, you might have an A, a B, and then a C move. Either happens here or you already had the C wave that played out. Now, and C doesn't always have to, whenever you have a corrective move like this, C doesn't always have to come down to this low here. It can either pass this area, it can be above this area, or it can be equal to the bottom of this area. It's difficult to know, but using other indicators are very helpful as well for predicting this stuff. This is just like a bigger perspective on understanding the cycle. So you can always, if you don't clear this old high here, then you're doing an ABC correction, right? So that's a bigger concern, right? So it could be over, it could be kind of just getting started. Okay, now I go over what I expect in the Patreon, but this will kind of help you in the future. But what happens after that? There is a chance to do an ABCDE correction, which is a longer term time correction, but I don't expect that on Ethereum. I think the next cycle that we have, once we bottom out here, if we haven't already, is a new impulsive wave to the upside. Okay, so that is just the gist of Elliot Wave Theory. It's very, very helpful. It's something that you want to keep in mind. You can see this pattern on all of charts throughout history. Basically, it's just human emotion in a theory, and you can mark it on a chart, which is very helpful to understand. So check out the Patreon, and let me know if you have any questions. Hope you enjoyed this.